Dear students, in our previous video, we had learned how to calculate cash inflow and outflow from operating activities. Now we will discuss how the cash inflow and outflow is calculated from investing activities. As earlier I have shared with you, investing activities are those activities that are related to sale and purchase of long-term fixed assets or non-current assets, which are generally not for the resale purpose. Land and building, plant and machinery, furniture, these fixed assets are not held for the resale purpose. And the activities like sale and purchase of investments that are not included in the cash equivalents, because in cash equivalents we will take only for the short-term marketable securities or short-term investment, or also included in investing activities. Any income arising from such investments are regarded as part of investing activities. So under this category, under this part, we will calculate cash inflow and outflow from investing activities. Inflow will be there when there is sale of such fixed assets or non-current assets, and outflow will be there when we have the purchase of these types of the assets. Afterwards, we will discuss how to calculate cash inflow and outflow from the financing activities. I hope you know the meaning of the financing activities as I had shared with you in my first video. Now, financing activities basically means what? Financing activities are those activities that are related to capital or long-term funds of an enterprises, and these activities result in the change in the capital and the borrowed fund. So inflow and outflow from the various sources of the capital is regarded and recorded under this heading, that is cash inflow and outflow from financing activities. Now cash inflow from financing activities will be under this head, mainly from cash proceed from the issue of shares and other similar instruments, like cash proceed from the issue of debentures, long-term loans, notes, bonds, and other important long-term borrowings here. So that will be regarded as the cash inflow from financing activity. Like the cash outflow from the financing activities for what? Cash repayment of amount borrowed in the form of debentures, loans, or redemption of debenture, repayment of the debenture, loans, or long-term borrowings, buyback of the shares and debentures, interest paid on the long-term liabilities, that is debentures, loans, and advances, and then dividend paid to the preference shareholders and the equity shareholders. So these are the major heads on which the cash is outflown on account of the financing activities. Let's discuss one very important and simple question. Then I will continue with the other questions so that you understand in perfect form from your book and the other important material. Now, first of all, we will discuss a very simple question that is given here. Now, here it says that prepare a cash flow statement from the following information. You have been given balance sheets of the 2 year, 2004 and 2005, and some additional information is given here, that is depreciation charge on plant amounted to rupees 80,000. Dear students, while solving this question, first of all you have to see very carefully that years are given in which form. Here, like the years are given base year and the current year. Sometimes in order to confuse you, the paper setter may give you the current year first and the previous year afterwards. So first of all, you have to convert this way, that base year and current year, or while solving the problem, you have to take the effect considering in mind that the base year and current year and in which structure it is to be given. So here it is given in the order base year first, followed by the current year. Then to the additional information is given only one, that is relating to the depreciation on plant amounted to rupees 80,000. So how this question will be solved? Dear students, you all know we have to solve this question into three individual parts, that is calculation of cash from operating activities, cash from investing activities, and cash from financing activities, and then we have to make the conclusion with cash and cash equivalents here. So let's understand how the problem will be solved here. First of all, we will calculate cash flow from operating activities. We start with the net profit as per the balance sheet it is given, and we will take the net effect in the outer column. See here, in the previous year the profit amount was given 3 lakh. In the current year the profit amount was given 5 lakh. So here the difference is like to the 2 lakh, and that will be taken cash flow from operating activities. First part, net profit as per the balance sheet, that is rupees 2 lakh. Afterwards, we will add to the non-cash and non-operating expenses. First here it is depreciation on plant, as it is given here in the information as additional information. So we will add back it as a non-cash item. The second item we will add, that is goodwill written off. See here, the amount of goodwill in the last year was 2,50,000. In the current year 1,70,000. So it is writing off of the goodwill. Sometimes it is sale also, but we will assume here that it is the writing off of the goodwill. So 80,000 is the amount which is to be added back in the net profit. Then discount on debenture issue, that also has been written off. See here, the last year the amount of debenture discount is given very simply in this question. That is here, see, it is given rupees. Let me do check where it is given. It is given here. Discount on debentures last year 50,000. Now it is 30,000. So 20,000 being written off. It is a non-cash, non-operating item that will be added here. So after this, we will add all these amount, and then we will get the result here. See here, it is 180 plus 2 lakh, 3,80,000. Operating profit before working capital adjustment or changes. And working capital adjustment and changes include changes in the current assets and the current liabilities. So we will take the effect of that, current assets and current liabilities. But see here, we have not to take the effect of the cash and cash equivalents. Now what the rule is there? If there is increase in the current liability, will be added. If there decrease in the current liability, that will be deducted. If there decrease in current assets, that will be added. And if there increase in the current assets, that will be deducted here. So this way we will take the effect. See here, increase in the current liability, creditors 3 lakh. See here, the last year creditors was 6 lakh. Now it is 9 lakh. So there is increase in the current liability. We will add to the amount of rupee 3 lakh here. Then to the current assets, see about the sundry debtors. Sundry debtors last year was 4 lakh. Now it is 6 lakh. It is increase in the current assets, so it will be deducted here. See here, we had deducted sundry debtors rupees 2 lakh. You may write the minus figure within the bracket also. Then to the stock or the inventory, see last year value of the inventory or stock was 5 lakh. Now it is 6 lakh. So it is increase in the current assets, so it will be deducted the amount of rupees 1 lakh here. See, then 3 lakh is in the deduction. You would find here, after mutually adjusting all three items, 3,80,000 operating profit before working capital changes, then add the amount of current liability 3 lakh, less the amount of changes in the current asset again 3 lakh, net cash from operation as it is plus rupee 3,80,000. If it come in minus, we will use the word cash used in the operation or cash lost in the operations. Now, second item we will discuss, that is cash from investing activities. Dear students, as I share with you, cash flow from investing activities means purchase and sale of the long-term or non-current asset. Here there is purchase of plant, as it is outflow. We will write here in the minus sign within bracket 2,80,000. How this has come? See here, understand. We have to see here the value of the plant. Last year it was 5 lakh. At the end of this year it is 7 lakh. But most important thing, that during the year we had charged the depreciation of 80,000. See, original or value, book value was 5 lakh at the beginning of the year. Depreciation charge 80,000. So closing value of this asset must be 4,20,000. But actually it is 7 lakh. So the difference is the addition or purchase in the value of fixed asset. Originally it was 5 lakh. Depreciation charge 80,000. So closing value must be 4,20,000. But actual value given in the balance sheet is 7 lakh. So difference of 2,80,000 is taken as the amount of purchase or the addition. You can get it also by preparing a very simple plant account, and you would have the result that 2,80,000. See here, book value originally at the beginning of the year 5 lakh, depreciation charge 80,000, closing value is 7 lakh. The difference of rupees 2,80,000 is the amount of purchase of the plant during the year. So as purchase of the plant is the outflow, so we will show here as a minus item. So here net cash used in the investing activity, it is in minus, that is 2,80,000. Now we will discuss about the third important activity, that is cash flow from financing activities, that is inflow and outflow on account of the capital changes. Once again we will switch over to the balance sheet and see what is given here. Last year the value of equity share is given 5 lakh, now it is 7 lakh. It means rupees 2 lakh is the issue of shares during the year. We will have the inflow of the capital through issue of the equity share. See here, we will write here issue of equity shares rupees 2 lakh. Likewise, see here with reference to the debentures. See here, debentures last year was 6 lakh, now it is 4 lakh. So rupees 2 lakh debentures being redeemed or repaid during the year. So we will write here as a minus. See, repayment of the dividend, that is redemption of dividend rupees 2 lakh. So net effect cash from financing activities nil. Inflow from issue equity shares 2 lakh, outflow with the redemption of debentures rupees 2 lakh, net effect is nil. So here from financing activities effect is nil. From investing activity, it is outflow net cash used in the investing activities 2,80,000. From the operating activities, we have cash from operations or operating activity 3,80,000. Now we will mutually adjust the three values. This is of plus cash from operations 3,80,000. It is in minus cash used in operating activities, and again there is nil effect. When we will adjust these three items mutually, you would find the result here that net increase in cash and cash equivalents, that is rupees 1 lakh. Now in this we will add the opening balance of cash and cash equivalent at the beginning. Here it is given in the balance sheet, that is rupees 3 lakh, and the result in the conclusion is rupees 4 lakh. That is already given as per the balance sheet. This is 4 lakh. So you would find your answer is mutually satisfactory, or you can verify your answer in the examination itself that your closing cash and cash equivalents always come as per the calculation or given in the balance sheet. So dear student, this way we have learned how to prepare the cash flow statement in the simple way from the different or various activities. I will share with you in our next video when additional information is given how the cash flow statement is prepared. Thank you very much. Have a wonderful day.